But in terms of the broad growth story for Europe, Sarah, where are we right now? I was reading a fascinating article on the Bloomberg this morning talking about how we were going to get a raft of data over the next couple of weeks that will really tell us whether that slowdown in the first quarter was temporary, as the ECB seems to believe, or not. What are your thoughts this morning?
Well, I think that, first quarter was clearly hit by a number of factors that won't be repeated in the second quarter or for the rest of the year. The weather was particularly bad. There was a flu epidemic, timing of Easter and strikes all seem to have had a downward impact on growth. I think a couple of factors, though, that may be a cause for concern. The rise in oil prices, the rise in energy prices is broadly negative across Europe, and uncertainty over trade. We haven't even seen really any clear trade tariffs being imposed yet, but the threat of that and threat of protectionism seems to be weighing on business sentiment. Our own view is that we'll see growth recovering in the second quarter, and some of the survey data are certainly pointing in that direction. But I think it's right. We need to follow what happens to the data over the next couple of weeks to get a real sign of where we're headed.
Sarah, one of the considerations is what's happening in Italy. And I think Italy is a personification, by the way, for the fiscal, I suppose, delicate situation we are in Europe. If we have this new coalition coming to power, they're going to be perhaps fiscally more liberal. When you look around Europe from an economic point of view, where are we on the deficit situation, on the debt to GDP situation? Is there anything in the backdrop that we should be a little bit concerned about?
I think quite the contrary. The deficit is particularly low at the moment across the euro area. We're looking at a deficit of under 1% of GDP, which is quite remarkable when you consider where we were just 5-6 years ago. So the Italian situation, I mean, maybe a little bit of cause for concern in terms of the potential dialing back of some of the reforms that were brought in by the previous government. But at the same time, Italy also has maybe a little bit of scope for more fiscal stimulus, and borrowing at the moment is particularly cheap, not just in Italy but across the euro area. So I think that we don't need to be too worried about fiscal stimulus. That will be something which will support growth for the rest of this year, in my view. So
fiscal stimulus in Italy might not be something to worry about, Sarah, but what about some of the other policies that have been talked about by the Five Star, by the League? Huffington Post was carrying a story overnight which talked about how, as recently as Monday, these two were talking about allowing countries to leave the euro. They were talking about asking the ECB to forgive 250 billion euros worth of debt. When quizzed on this, De Maio of Five Star says, well, that was Monday, a lot's changed since then. But markets, do you think investors are being too complacent about what could be some big policy statements from this new Italian government, or do you think there are so many hurdles to get there?
There does seem to be a certain amount of complacency amongst markets and investors. If we look at what the position has been of Five Star, and particularly of Lega, on the euro and the EU, they've said some pretty tough things.
And just to underline that complacency, I mean, I've got this BTP chart which shows the 10-year BTP spread over bunds, and there's been a little nervousness, but not perhaps to the extent that you might have expected to see had this kind of government been talked about, say, 6 months ago.
Exactly, and if you look at the sort of BTP spread by comparison with where we were a year ago, where there were real concerns about the French elections, and Italy was suffered from the fallout. So I think that we need to keep an eye on where policy is going. As you say, there are many hurdles to cross before Italy potentially leaves the euro or leaves the EU, including there would need to be a change in the constitution for a referendum on euro membership to be held. So I don't think we're going in that direction, but I think at the same time we do need to be aware of where the Italian government, the coalition which is being formed, what their starting point is.
Sarah, I heard what you said in regards to budgets as a percentage of GDP. I mean, we're still looking at Portugal at 3%, Spain at 3.1% as a percentage of GDP. But what's more fascinating is perhaps what's happening with German growth. And I want to know whether you think this is just a wee bump in the road, or whether there's something more at play here, because essentially Germany stumbled 0.3%. It's Europe's largest economy, less than forecast, the weakest in a year. I mean, look, nothing accelerates forever. I get that. But do you think that just the anomalies of weather, of the flu, of those kind of things in the first quarter, and that it's just a bump in the road?
I think it is a bump in the road, but I think that for German businesses in particular, the uncertainty over the global trading environment is weighing on sentiment. And of course, that will have a feed-through impact on investment. But we have to remember that in Germany and across the euro area, domestic demand is what's significant. And we still see no particular reason for consumer spending to slow down. We see a sustained fall in unemployment. Of course, in Germany, you've got an incredibly strong labour market, rising real wages, confidence amongst consumers is pretty solid. So I think that for the second, third, fourth quarters of this year, we're probably looking at a much better picture than we saw in the first quarter.